Hi everyone, it's Sunday, December 8th, time for another HideNet Week in Review. I'm Vera Dordick. Starting with the United States market, our report sounds like it's on repeat because once again, sellers were able to hold prices steady. That said, most sources said it was a rather mediocre week with sellers unable to push prices higher. Also, selections that typically go to the automotive sector are under some pressure and will likely remain so through the rest of the year. With regard to sales of regular weight heavy Texas steers during the week, there really weren't many, but the trading was reported at still steady levels of $28 on 68 pounds. With regard to the cow market, it was the same story with little, if anything, having changed. For the time being, prices are hanging on even with diminished interest. U.S. slaughter for the week was estimated to be a whopping 679,000. This is the highest weekly slaughter for the year. The closest was back in week 19 when the total was 670,000. Combined export sales for the holiday week ending November 28th were 693,400, and combined shipments were 628,300. This week's report also has some interesting monthly average figures for November, which shed some light on the level of sales and shipments because they've been an active topic of discussion in recent weeks. In our observations this week, we do a status check on prices and what's going on with the various price levels on different steer selections. Moving over to Europe, editor Andrea Guolo says that the English 36 plus ox was sold as high as 78 pence per kilo for some smaller quality lots, but that most were sold at 75 pence per kilo. In Ireland, the situation is similar, but the high quality lots can earn even more in euros. With regard to cows, Andrea says sales prices are generally unchanged, with some origins more requested and some small sizes still suffering. In the bull sector, he explains that the situation in the tanneries is not the best, and some origins are having problems due to lower meat demand and hence lower slaughter. In his analysis for the week, Andrea rounds up what happened at the UNICH meeting last week and the depressing news that activity in Italy has dropped by 12% in 2019 for the leather sector. He also goes through the organization's new initiatives for this sector and then discusses the holiday closure plans in Europe, as well as why the outlook for 2020 is not positive for most. From South America, editor Ronald Guiel reports from Brazil that rawhide prices continue to be stuck at unchanged levels, with fresh hides still at 59 cents in reals. Thanks to the exchange rate, that is again still 14 US cents. The big news was a jump in TR1 this week thanks to some changes in the market, which now have it selling for 55 US cents per square foot, which is up about 7 cents from last week. In other news from Brazil, we hear that São Paulo has cut taxes on footwear at the industry level. The country's footwear exports hit 886 million through November, with the US really having increased its imports of Brazilian shoes. There's also a story on how JBS plans to invest $8 billion in Brazil over the next 5 years. From elsewhere in Latin America, we have items on Argentina's clothing, leather, and footwear exports being down by 7.2%, Colombia's cattle slaughter being up slightly in the third quarter, and an effort among the countries of the Andean community to have a unified technical standard for footwear labeling. We also have news on Guanajuato's exports in 2019 to date, and shoemakers in Paraguay closing the year with a 30% increase in sales. That's all we have for today, so until next week, good night from HideNet.